Thanks again, and welcome to another episode of investment dividends into your investment account. So this time we've gone into our other account. Prior video was from our one brokerage account. This is a separate account we had set up about a year ago, post-pandemic, probably it was about September of 2020. It's now currently October 2021, and we'll see the past 12 months of dividend activity on this account. It's only got about 7 or 8 positions, and right now I believe just individual stock holdings, and you're going to see how that was. You can see the first dividend was CNQ, Canadian Natural Resources, is a quarterly one, but what take note of is the Riocan dividend on October 7th. The dividends were $60, but what happened a few months later was they did drop their distribution. So now not all dividends are guaranteed, but we will actually see that 60 drop into the 40s at some point in the new year. So as we take a look, we have a healthy pipeline. So you get 60 from Riocan. True North gave almost 40 at 39.6. Pembina pipeline, so you got about $120 in a monthly dividend there from those 3 positions. And then we had our Trans-Canada position come in, which was close to $90. It was pretty good October for the dividends that did come in. And you're going to see, so Trans-Canada, TD, those are quarterly dividends, and Riocan, which you'll see pop up every month as a real estate investment trust, with Pembina and True North again. So then we saw our bank dividend from Royal Bank, the RY there. Yes, this is a Canadian account, so if you are an American viewer, you're not going to be used to seeing these, or they'd be in different numbers because this is traded on the Canadian exchange. So we saw December 1st, Enbridge's pipeline dividend coming in as well. So that one's quarterly, so $121.50. That works out to $40.50 per month, assuming that was constant. And so it's going to get pretty repetitive. I think the only thing we're going to see in the near term here is the cut in dividend for Riocan. There you go, February 5th. What used to be a $60 dividend is now $40. So if we scroll back up, the month before, top of the screen, January 8th, $60 dividend, and now February 5th, after their dividend cut down to $40. But you'll see the other ones are still going strong. Enbridge's dividend went up. I think we had bought more units. We filtered out our activity for just dividends and distributions. You don't see any of the buys or sells on this account. True North up to $54. Pembina 31 now, and so as you can see in 2021 we've just kept the dividend stream constant, used some of those built up dividends to buy more shares. So and then Riocan down to 32. I think we took some profits as the stock was going up, and we didn't like the yield anymore because it was below 5%, which REIT should be higher, and I think we just reallocated to a different position. So pretty repetitive there. But what you can see is over a year, it's been a nice buildup of on average of a few hundred a month. So this is probably a couple $1,000s worth of dividends. And this was the end of the activity for this account. Now, keep in mind, these are the dividend payers. These are not your growth stocks that, like my Amazons and my Googles that have been in there, because they're not paying anything. So thank you for tuning in once again. If you want us to provide more content about dividend investing, passive income investing, please let us know, and we'll be happy to do that. Okay, so now we've switched over to what are our holdings. This is now October 2021, so things might have changed, but you can kind of see the positions here. It's a purely Canadian account. The same dividend pairs we saw in that account. You can see the breakdown. They've all, remember, a lot of these were bought, before the pandemic started, they crashed, so we were able to buy a bit more. You're seeing massive rates of return, but in a year's worth of time. But that's not standard. But this is just more to break down the diversification of the portfolio. Positions end up being anywhere from 4,000 or 5,000 all the way to 8,000 or 9,000 to what they are right now. And we've gone in and out of positions, but you can always look up the price of some of these items there. But you can see the source of the dividends. This is not really a diversified portfolio. This was not designed to be one. It was just designed for heavy dividends. And as the rest of the S&P 500 took off, Canada lagged behind. So we ended up having a little experiment we did on a purely Canadian account. It's looking better a bit now, but it lagged initially. But with reversion to the mean, some capital gains, and some heavy dividends, we've done quite well on this portfolio. So like we said, please, if you have any questions, tell us the type of content you want to see. It doesn't have to be a pure dividend channel. It's about investing if you look at the other videos. But happy to go into heavy detail about dividends. So thank you very much, and we'll see you next time.